Your bookkeeper reports your past, your CPA reports your taxes to the IRS, your CFO is responsible for your financial future. And if you're at or around 10 million a year and treating those three roles like they're interchangeable, you're probably overworking some great people and underutilizing the one role that's built to help you make their big growth decisions. In this video, I want to show you how bookkeepers, tax CPAs, controllers, and fractional CFOs all fit together so you can understand each lane and get the strategic help when you actually need it. And at the end, I'm going to give you specific interview questions you can literally read off to figure out whether someone is really a bookkeeper, a tax filer, a tax strategist, a controller, or a true CFO. Let's start at the beginning. Why you'd hire each one in the first place. If we haven't met, I'm Joe Isaac, founder of the CFO Group. I run a fractional CFO firm, especially for companies around that 8-figure mark that are great at what they do and want the same level of expertise on the finance side. You know how to generate revenue. What you want is financial clarity, better decisions, and fewer surprises. Here's the simple mental model. A bookkeeper organizes and reports the past. A tax CPA reports the past to the government and keeps you compliant. A controller makes sure that the numbers and processes are tight and interprets what happened and why. A CFO then uses those numbers to influence the future and guide big decisions. All of them matter, they're just solving different problems. A bookkeeper is usually the first finance person that you hire. You start your business, money's moving, and then suddenly the volume of transaction just becomes overbearing. You're managing receipts in a pile or a folder, you're trying to log everything at night, you're stressed about taxes and doing it wrong, and it's actually slowing down the growth of your business. That's the point where doing your own books isn't really responsible, it's a bottleneck. A good bookkeeper will manage all of those receipts and transactions. They'll code them correctly to keep your profit and loss balance sheet and cash flow up to date. They'll track your accounts receivable and your accounts payable so you know who you owe and who owes you money. They report the past so you don't have to live in QuickBooks. They free up your time so you can go back to selling, building, and leading your business. They're the foundation. Without clean data, no one else can do their job well. Okay, let's talk about a tax CPA. A tax CPA is a certified public accountant whose core responsibility is tax and compliance. Their job is to file your local, state, and federal returns, making sure you're doing it correctly and following the rules. They'll help you with your entity structure in big tax elections. They'll represent you if the IRS or the state has questions for you. You're basically paying for technical expertise and liability. That's why they cost more than a bookkeeper. There are really two flavors of tax CPAs. The first is the tax filer. They focus on accurate, timely returns. You hear from them mostly at tax season. They're essential, but they're not deeply involved in your year-round decisions. Okay, then you've got the tax strategist. They'll meet with you during the year. They'll help you plan your income, your timing, and your structure to minimize your taxes. They hopefully bring proactive ideas, not just a completed return. Now, the filer and the tax strategist both can be great at what they do, but you'll want to understand which one you're actually hiring. Now let's talk about controllers. A controller, they basically own the accounting function. They make sure that the numbers are right. They oversee your financial operations processes like your accounts payable, your AR, your payroll, and they manage the close process. They tighten internal controls and policies, and they help interpret what happened and why in the financials. Most of their work is focused on ensuring the financials accurately reflect the past actions of the business. All right, so let's finally talk about a CFO. A CFO takes the great information that we've already discussed and they put it into action. That's the biggest difference. A CFO will help you understand the cash flow forecast. They will lay out different scenarios. They'll sit with you on big decisions like hiring, debt, business expansion, and then they'll also communicate with banks and investors in their language: EBITDA, debt covenants, returns, and risk. So you could think of it this way. A controller equals accuracy and interpretation. A CFO equals direction and influence. Most smaller companies need aspects of both, which is why it gets confusing. Now, where does a fractional CFO fit in all of this? A fractional CFO is a CFO you hire on a contract or recurring engagement instead of hiring them full-time. They step in when your questions shift from how do I log this and are my taxes filed to should I spend more on advertising? When do I hire? Should I cut expenses? Why is my cash flow running out even though the P&L shows profit? Do I get a loan, a line of credit? Do I talk to investors? Basically, a good fractional CFO will help you interpret your financials in the context of your business. They'll build forecasts and scenarios so you can see the future, not just the past. They'll help you decide whether to raise money or take on debt and guide you through that process. They'll speak to banks or investors on your behalf in their language. They turn "I don't understand my numbers" into "I know exactly what we can and can't afford." Basically, financial strategy is at the heart of this role. You're not just paying for more data, you're paying to increase the likelihood you reach your dream outcome with less risk and less wasted effort. So that's what a fractional CFO does. They sit next to you on the big financial decisions using real numbers instead of guesses. A lot of owners then ask, how is that different from hiring a full-time CFO? It really comes down to scale and intensity. So a fractional CFO makes sense when you have real revenue and complexity. You need strategic finance and better decisions, but you don't need or can't justify 40-hour-a-week CFO managing a big internal team. They might be with you a few days a month or a few hours a week, focused on strategy, forecasting, and key decisions. While a full-time CFO usually shows up when you have, multiple entities, locations, investors. You've got a large internal finance team with finance ops like AP, AR, payroll. You've got a controller and an analyst, and the CFO oversees the whole organization. This is where you need daily coordination with, say, legal, tax, operations, and sales. You've got, say, regular board level or investor level reporting demands. Basically, think of fractional as CFO level thinking sized at your stage. Full time is when the business is big and complex enough that you want that person in the building every single day. Now let's get super practical. If you're about to hire any of these roles, here are the top 3 questions you can ask to help filter them quickly. So for a bookkeeper, what experience do you have with companies like mine at or around our revenue size? Number 2, walk me through your month-end close process. When specifically are my books 100% complete each month? Number 3, what reports will I see every month, and how do you check for errors before I see them? You're looking for real experience in your world, a clear process, and attention to detail. So on average, a good bookkeeper should close your books by the 10th business day every month. If you're getting 3 weeks, a month, or once a quarter, go somewhere else. 10 business days should be standard, if not earlier. For a controller or a fractional CFO, this is where the strategy versus reporting the past will help you differentiate. So number 1, tell me about a time you helped a company like ours make or protect 7 figures. What was the decision and what changed? Number 2, in the first 90 days with us, what would you build and what decisions would we be able to make that we can't make today? Number 3, how do you work with our bookkeeper and CPA? Who owns what so nothing falls through the crack? You're filtering for someone who thinks in terms of decisions and outcomes, not just deliverables. Okay, so for a tax CPA versus a filer versus a strategist. So 1, outside of tax season, what does our year look like? When do we meet? What do we cover? If the answer is basically see you in March, they're a tax filer, they're not a tax strategist. Number 2, can you share 2 or 3 examples where you proactively helped clients my size save meaningful tax by planning, not just filing? Okay, then number 3, how do you prefer to coordinate with our bookkeeper and CFO so we're not just dumping a QuickBooks file on you at end of year? You'll hear the answers and very quickly know whether they're a pure compliance partner or a strategic one. So to recap, your bookkeeper keeps the past organized so you don't drown in receipts and reconciliations. Your tax CPA keeps you compliant and out of trouble with the government and sometimes helps with strategy. Your controller makes sure the numbers and processes are tight and explains what happened in the past. Your CFO then uses those numbers to guide what happens next: hiring, pricing, growth, debt, and investment. And a fractional CFO gives you that CFO thinking sized to where you're at now without the full-time cost and headcount. So if you're at or around that $10 million mark, you know your business cold, but you want that same level of expertise in the finance side, that's exactly what my team does at the CFO Group. We plug into your existing bookkeeper and CPA, We build the model and the dashboards and then sit with you on those big decisions. When to hire, how hard to push ads, whether to cut or invest, whether to take on debt or talk to investors. If you want to see what that would look like in your world, click the link in the description, pick a time that works for you, fill out a few numbers so we can come prepared, and then on the call, we'll walk through your situation. We'll tell you honestly whether you actually need a CFO right now, and if you do, what we'd focus on in the first 90 days. Worst case, you walk away with more clarity. Best case, you stop making 8-figure decisions without a real finance partner in the room. I hope that helps. If you found this video helpful, go ahead and click this one next. See you in the next one.